Hey everybody, hope you and your investments are doing well. I think summer is over, so because here I am making videos again. I've got the house to myself, kids are off to school. So yeah, summer's over and it was a good one. I hope you guys had a great one too. And what I want to talk about in this video is what did I do this summer with my investments? So there were 5 stocks I'm going to tell you that I jumped on the opportunity to buy them, and it was a great opportunity to do some dollar cost averaging. It was a good opportunity to do a little maneuvers, to keep my stock portfolio growing. And yeah, let's get into it. But first, introductions. Hey, my name is Steve Coleman, and I am a dividend stock investor putting $150 every week into my tax-free savings account. I'm putting money into a stock-free savings account, buying dividend stocks to kind of grow some passive income, taking those dividends, reinvesting them, and keeping that portfolio growing. Let's get on to the 5 stocks that I was purchasing this summer. And the first one, and I'm going to be looking at some notes because I'm not going to remember these 5 different numbers. So the first stock that I purchased was Algonquin Power and Utilities. So this is a renewable energy company. If you watch one of these videos up here, you will know that I like my renewable energy companies. I want to grow my portfolio to be roughly 25% in the renewable space. So when Algonquin, ticker symbol AQN, dropped down, I decided to swoop in, buy 14 shares for roughly $240.98. So that was a good buy. So again, most of these stocks that I was purchasing, they dropped below my average buying price. So I was always trying to get that average buying price lower and lower and lower. So that when these stocks do go back up, just that the difference between what I purchased in at and where my unrealized gains are is just even more greater. So Algonquin was a no-brainer for me. After that, I decided to buy Royal Bank of Canada. So I bought 2 shares of Royal Bank of Canada, roughly $123 each, so it was $246.75. Royal Bank was one of my stocks that did not go down below my average buying price. So that stock, that position was the only one, actually that and Pizza were the only ones in the green for me. Of course, everything else was down, bringing the entire portfolio down, where I think at the worst I was below 7% of unrealized gains for my entire tax-free savings portfolio. So maybe it's too early to say where it is right now, but there's room to grow. So when Royal Bank went down to basically the halfway point between my original buying price and the stock high, which I think it was around $150, it was like, okay, now's the time to add more to Royal Bank of Canada. So the third position that I bought into was BCE. 5 shares of BCE for roughly $322. So this is a company that, one, I'm a customer of, but then 2, again, the telecoms are another great dividend investment vehicle for us to choose from when we're looking at Canadian companies. Canadians don't have as many dividend paying companies to choose from or sectors as we do in the United States. But, telecoms are up there. And BCE, again, because I'm a customer, I'm going to kind of invest into the places where I'm personally invested, if you will. So bought more shares of BCE. So again, they pay a dividend yield over 5%. So again, that helps keep my overall portfolio average in that 4% mark. So it was a wise choice. Again, the price was below the average buying price. So it was awesome. The next one I bought was Aecon. 37 shares for 428 cents. So this was one that I put a lot of money into when that stock really dropped. At one point, and maybe it is right now even, I saw unrealized losses of like 25 to 30% this last like 4 months. So Aecon really dropped. Ticker symbol ARE. It dropped significantly. So instead of panicking, you buy, right? You consistently buy into the stock market. That is the number one secret that we all know, and I'm sure we're all practicing. You'll tell me in the comments what stocks you were kind of constantly buying, dollar cost averaging in. I'd love to hear it, so leave those comments. But yeah, Aecon, once it dropped, it was like, okay, it's on sale. Let's buy more Aecon. And then because it's dropped, the dividends are the same. Its dividend yield is that much higher and that much more attractive. I think it's around the 6% mark. I'm going to put it on the screen so that way you can see for sure once I do some post editing. So Aecon was a no-brainer. A lot of these were no-brainers. You know, I'm using my spreadsheet to kind of show me what are the percentages that things are gains or losses. So that definitely was an amazing tool. There's a link down below if you want to check out the spreadsheet. So it helped me figure out which ones I should really be investing in. And using that spreadsheet too is also helping me know which ones I should maybe get rid of as well, which leads me to the fifth stock that I purchased. But before I purchased it, I did drop VFV. So this is the Vanguard S&P 500 ETF. You know, so an exchange index fund, exchange traded fund. That it pays a dividend yield of just 1%. So it was not a good match for my overall portfolio. Yes, it gave me some of that US exposure, which is originally why I bought it. But I had since then bought into an RRSP, which I gave myself a whole lot of that additional US exposure. So I did not really need to do the same thing in my tax-free savings account. I'm covered for my global exposure. So the tax-free savings account is just a vehicle for me to kind of just play and look at some individual stocks and just learn more about the stock market and make these videos for us all to kind of just learn about all the ins and outs of just basic investing principles. So it was the time to get rid of VFV. So 1%, I traded in for a dividend yield company or whatever paying company that was more around the 6% mark. And that was Diversified Realty Corp, ticker symbol DIV. So I ended up selling VFV. I made $20 off the sale, but I put all that extra money plus a little bit more into VFV and I bought 243 shares worth $675. So how this really makes sense for me, because I'm a dividend stock investor, is this way. You know, for the entire time that I was holding VFV, which was roughly, say, a year and a half, from those dividend payments, I made $7.77. All it's going to take is one dividend payment now from Diversified Realty Corp, DIV, and they pay monthly. So just one monthly dividend is going to be worth roughly $7. You know, I already have some stock in that, so it's actually going to be more than that. But, you know, I'm going to get way more. So that swap is going to help me grow my portfolio that much faster and allow me to kind of start doing a bit of a drip program or something like that, where then I can take those dividends and then buy more of the same company and then just get that snowball rolling. So this was a wise move on my part. This worked for me. Again, this is not financial advice. This is just sharing kind of my investment journey, hoping that you see some parallels with yourself and we can kind of encourage each other, especially during these times when things drop. So like let's talk about what we're each doing to kind of make sure that we are staying in the game and, you know, keeping our eye on the future, because that is really, that's who we're working for. We're working for future self, future Steve, you know. He's going to want some nice things when he's older. So, yeah, so those were the 5 stocks that I bought. Again, leave me in the comments. Heck, subscribe to this video if you enjoy this kind of content. I want to come back to you guys every week now that the kids are in school and I have more of the house to myself, to keep this conversation going. So I would love it if you join me along. Subscribe. Again, more links down below. Got my spreadsheet that you can check out. And yeah, we'll see you in the next video. Keep it in the green, guys. I know it's tough these days, but we can do it. Keep it in the green, and we'll talk to you later. Take care.